Very good morning, friends and traders. I'm Nalnakshi Swami. Welcoming to my channel, Smart Index Edge. When big money enters the market, it can bend trends, break patterns, and change everything in a single day. Yesterday, we witnessed a classic example of how big money moves the market. Nifty opened with a massive 398-point gap, and yet the entire day's range was just 178 points. This is the power of institutional money. It doesn't always show its hand directly, but when it does, it can redefine the game in seconds. In today's video, let us decode what this move really means, how to understand the play behind the price, and what traders like us should watch out for the next. So, I'm on the hourly chart. You can see it is a V-shaped recovery, V-shaped downfall, and it is a recovery. It has taken in this fall 1, 2, 3, 4, 5, 6, 7 days, and the recovery is in 1, 2, 3, 4, 5 days. The recovery is within the 5 days because of the gap up. The market is at the 31st July top. It just crossed 24,956, and then it went little bit past of it to make a high of 25,080, and later it could not sustain that move, and then market started its downward journey. After the first hour of high move, the market slowly came down in between pullback and all those things. These are the hourly balance lines, 24,896 and 24,955. They will act as levels for to watch. And there is a huge gap over here. We need to see market is sitting over here. After the gap up, it is a huge gap breaking all the barriers. We need to see whether the market, this is the low, the important low is 24,852. If the market starts trading down, if it any pullback to the upside, level to 24,950 or 24,902, above that, and starts trading below the boundary of yesterday's low, then it can retrace little bit, go up to 24,780. 24,780, because 24,719 and 24,782. This is the level. These are the levels. They may act as support for the market. The market, if it comes down, otherwise, it can trade within this range of 175 points, finish the game within this range, or break above this level. Suppose if it starts moving above this level, then entire game will change. It will cross the monthly high. 31st July was the high, and it will cross this monthly high and make a, but it is a double top level where double top inducement has taken place in the market yesterday, because at that level market has tried to come over here, or it can come down and retest this level 24,782, and then it can reverse. The market can cross this boundary and close within the range. The market can do either breaking below this low and closing inside the range, or it can start moving like this and it can trade within this range or break above that range. There are two possibilities. The VIX is 12.34 and weekly high to be 25,303. But the daily high, you need to see daily high 25,037. Yesterday's high was 25,012 or 18. 25,000. I'm not able to see exactly. 25,022. So, and the VIX level daily low is 24,716. These are the boundaries. So, if the market comes and gives discount in this area, exactly around 24,787 to 782, then if the market starts moving up, then it will be a discount and market will gather momentum to cross this level, 25,037, and then it can go back and move into the territory of 25,303. In between, there is a level 25,100 to 25,192. So, coming to the Bank Nifty is also showing the same type of price behavior. It was a huge 800 points gap up, total move, and the daily range was 529 points. Out of 800, it has almost come, it has retraced. If I take this, more than 0.5% it has retraced. It's already retraced much. So again move, it can start moving higher. The levels to watch are 56,092 and 55,374. This is 31st July. The market as Bank Nifty has not come to 31st July level. That is 56,378. So Bank Nifty has got the room to test this level. It can go up to 56,378, and the levels to watch today are immediate resistance are 56,092 to 55,374. So setup is little bit on the Nifty is buy on dips. If it retests this level, 24,787, that will be a good opportunity to go long. So if I see the structure, if I measure this structure, 163 points, and if I measure, if this leg continues, this will be 162 points. That exactly sits on the flip level. So there, the market, if it comes down like that, if it comes down like this, and then if it starts moving, it can do like that. So any initial up move, you need to watch these levels, 24,959. If it fails to go past this level and starts moving down, it can go below the previous day, This is the previous day low. That is Monday's low and continue, and it can move like this. This may be the pattern we can anticipate in the market. So, in the opening bell, do not hurry yourself to enter into the trade. Wait. Wait for the setup to show you the direction. Then you take the trade. Patience always pays. Okay, friends. Thank you very much. Nalnakshi Swami signing off.